As global markets navigate treacherous waters, gold has obliterated all previous records, rocketing far beyond the $3,000 per ounce amid widespread geopolitical fragility, intensifying flashpoints, and the stubborn reality of persistent inflation. This isn't merely another cyclical upturn. It represents a seismic realignment in how wealth is preserved in our increasingly unpredictable world. Yet amid this historic stampede toward financial security, a disturbing phenomenon has emerged. Corporate retail giants have aggressively invaded the precious metals space, with Costco, Amazon, and eBay all hawking gold bars alongside bulk paper towels, electronics, and household trinkets, treating humanity's oldest and most respected store of value as just another quarterly sales opportunity. This calculated gold rush by retail conglomerates is anything but random. As conventional financial structures reveal deepening fault lines and central banks worldwide frantically accumulate gold reserves at unprecedented rates, these corporate Levithians have identified a strategic opening to position themselves between you and your wealth protection strategy. The fundamental question isn't about gold's relevance. Well, that case has been definitively settled through millennia of human civilization. The pressing question is whether you should surrender your financial sovereignty to the same corporate surveillance networks that meticulously track your purchasing patterns, content consumption, and personal habits. Is the Neighborhood Warehouse Club really the right place to make one of the most significant financial decisions of your portfolio? Should you really trust your wealth preservation strategy to the same platforms where you buy used books and household items? The recent surge in gold prices isn't happening in a vacuum. Central banks worldwide have been buying record amounts of gold as nations seek to reduce dollar dependency and hedge against inflation and uncertainty. Meanwhile, geopolitical conflicts from Eastern Europe to the Middle East have intensified the flight to safety assets and persistent inflation concerns despite central bank interventions, and you have the perfect environment for gold's traditional role as a crisis hedge. This uncertainty is precisely why investors are turning to gold, but uncertainty in markets demands certainty in your acquisition strategy. Costco's entry into gold sales represents a fascinating case study in retail opportunism. The warehouse giant began selling 1-ounce gold bars in late 2023, frequently selling out within hours of restocking. Their marketing approach is simple: leverage their trusted brand name to enter a specialized market traditionally dominated by experts. But critical issues emerge upon closer examination. Costco excels at bulk purchasing and distribution of consumer goods, not precious metals. Their staff lacks the specialized knowledge to advise on numismatic versus bullion investments, premium structures across different products, authentication beyond basic supplier assurances, tax implications of precious metals investments, and strategic timing of purchases and sales. When gold prices are climbing due to economic uncertainty, investors need more than just access to the product. They need guidance from specialists who understand market dynamics. And perhaps most concerning is Costco's clear lack of a buyback program. Gold investment isn't just about acquisition, it's about liquidity when needed. And established bullion dealers maintain transparent buyback policies with published rates, ensuring investors convert their precious metals back to currency efficiently. Well, Costco, it offers no such assurances. When the time comes to sell, investors are left to find their own buyers or dealers potentially facing significant spreads between buying and selling prices that erode returns. And if Costco's gold business raises eyebrows, the online marketplace approach should sound alarm bells. Amazon and eBay have become significant channels for precious metal sales, but they introduce even greater risks. Online marketplaces really struggle with counterfeit products across all categories, from designer handbags to electronics, and gold presents an even more tempting target for sophisticated counterfeiters. While these platforms have policies against fraudulent listings, their reactive approach means that many buyers discover problems only after purchase and delivery. Sophisticated counterfeits may include gold-plated tungsten bars, matching gold's density, coins with accurate weight but lower purity, products with falsified assay certificates, and replicas of recognized brands with minute differences. The marketplace model creates critical distance between the buyers and the actual sellers. So when you're purchasing through Amazon or eBay, seller verification is minimal compared to financial industry standards. Recourse for authentication issues is complicated by platform policies. Sellers may disappear or change identities between transactions. The chain of custody documentation is often incomplete or non-existent. Online marketplaces feature wildly varying premiums, often hiding additional costs in shipping, handling, or processing fees. Price comparison becomes nearly impossible as listings change constantly, creating an environment where emotional buying decisions replace strategic investment planning. But perhaps the most overlooked aspect of purchasing metals through mainstream retailers and online platforms is the privacy implication. Consider what happens when you buy gold through these channels. When you purchase gold through Costco, through Amazon or eBay, your transaction becomes part of your customer profile. Your investment decisions are linked to your shopping habits. Your financial strategy becomes data for algorithmic analysis. Your precious metals holdings become known to companies with varying data security standards. You've got to wonder, in an age where financial surveillance has become increasingly normalized, why voluntarily broadcast your wealth preservation strategy through retail channels? The very act of purchasing gold has historically represented a desire for financial privacy and independence from conventional banking systems. And yet here people are, swiping membership cards and creating digital records of our precious metals holdings with the same companies that track our purchases of breakfast cereal and lawn furniture. These retailers aren't just selling you gold, they're collecting valuable data about wealth, investment strategy, and risk tolerance. This information feeds into sophisticated marketing algorithms that will target you with related products, services, and more financial offerings. Do you really want your wealth preservation strategy to become another data point for targeted advertising? Or worse, a data point that could be shared with financial institutions, credit agencies, or even government entities under the right circumstances? The companies that know what you buy also know what you own. And in a world of increasing financial instability, that information carries significant power. And let's talk about security concerns, because security concerns start with physical security, and physical security starts with information security. When multiple entities know about your precious metals holdings, the risk profile changes. Traditional bullion dealers maintain strict client confidentiality as a core business practice, something mass retailers simply aren't structured to prioritize. So consider the implications of your gold purchases being stored in the same databases that have experienced major security breaches in recent years. The digital footprint of your wealth preservation strategy could potentially be accessed by malicious actors, creating vulnerabilities that extend beyond the digital realm into physical security concerns. Costco, Amazon, and eBay have no such standards. They simply sell products from various sources with minimal verification beyond supplier assurances. And beyond the transaction, perhaps the most compelling reason to avoid retail gold purchases is what economists might call the relationship premium. Established bullion dealers like GoldCore don't just sell products. We build long-term relationships with clients that provide value far beyond that initial transaction. And these specialized dealers provide regular market updates and analysis, insights on timing purchases and sales, education on portfolio allocation strategies, guidance on product selection based on investment goals, and historical context for current market movements. And what about buyback? Well, the true test of any gold dealer isn't how they sell to you, it's how they buy back from you. Established LBMA dealers maintain transparent buyback programs with published spreads between buy and sell prices, minimal verification requirements for returning clients, efficient settlement processes, multiple payment options, and no pressure tactics during liquidation. And what about storage? Well, professional dealers offer secure storage options that retail channels just simply can't match, including allocated storage with specific bars assigned to you, insurance coverage designed for precious metals, regular auditing and verification, jurisdictional diversification options, and seamless integration with buying and selling. Now consider this thought experiment. Would you purchase other specialized high-value items through general retailers? Would you buy, say, fine art through a grocery store? Would you purchase investment-grade diamonds at a warehouse club? Would you acquire rare collectibles through general online marketplaces? Would you trust legal services to a company that also sells furniture? Most people recognize that there is a need for specialized expertise in these areas, yet somehow gold, one of humanity's oldest and most significant stores of value, is just increasingly treated as another consumer product. And don't confuse visibility with viability. Costco's gold offerings have generated significant media attention, creating a self-reinforcing cycle of publicity. This visibility can be mistaken for legitimacy in the precious metal space. Remember that Costco's core competency remains bulk consumer goods, not financial products or precious metals. Their current gold offerings represent opportunistic marketing rather than a strategic commitment to the precious metals market. When market conditions change or media attention shifts, there's no guarantee that they'll maintain this product line with the same consistency that dedicated dealers provide. Some industry insiders have quietly questioned the timing of major retailers' entry into the gold market. Is it merely coincidental that these companies began aggressively marketing gold products just as central banks worldwide accelerated their own gold purchases? As financial institutions quietly position themselves for potential currency realignments, the sudden push to channel retail investors' gold purchases through trackable corporate channels raises some serious questions about who benefits most from this arrangement. The ancient wisdom of follow the money suggests looking beyond the convenient narrative of simply meeting consumer demand. The apparent convenience of purchasing gold alongside your household essentials comes with hidden costs, including higher premiums, eroding investment returns, lack of strategic guidance on timing and selection, absence of relationship-based services, limited or non-existent buyback programs, potential authentication concerns, and privacy and data security questions. These factors compound over time, potentially costing far more than the minor inconvenience of establishing a relationship with a proper bullion dealer. So for investors serious about incorporating precious metals into their portfolio, the path forward is clear. Establish a relationship with an LBMA accredited dealer with a proven track record and transparent practices. Develop an investment strategy that considers allocation percentages, product selection, and timing rather than making impulse purchases. Consider physical possession alongside professional storage options to balance those security concerns with accessibility. Understand the tax implications of precious metals investments in your jurisdiction. Create a liquidation strategy before you need it, understanding how and when you might convert metals back to currency. Maintain privacy around your holdings, treating investment information as sensitive personal data. Focus on long-term wealth preservation rather than short-term price movements or marketing trends. So as gold continues its upward trajectory amid global uncertainty, the temptation to acquire precious metals through familiar retail channels will likely grow stronger. Mainstream retailers will continue leveraging their brand recognition to enter this specialized market, particularly as media attention creates a self-reinforcing cycle of interest. But serious investors understand that true value lies beyond convenience. In a world of increasing economic uncertainty, the very reason many turn to gold, your acquisition strategy should provide certainty, not additional questions. The decision to invest in precious metals represents a commitment to financial security and wealth preservation across generations. Such a significant decision deserves the attention, the expertise, and relationship that only specialized bullion dealers can provide. When uncertainty drives gold prices higher, your response should not be to introduce new uncertainties through questionable acquisition channels. Instead, use this opportunity to establish relationships with reputable dealers who will serve your interests not just during this buying cycle, but through the entire life cycle of your precious metals investments. Throughout history, gold has represented not just wealth, but independence, a financial asset outside the conventional system. There's a profound irony in purchasing this symbol of financial sovereignty through the very corporate giants that epitomize centralized commerce and data collection. Perhaps the most important question isn't about premiums or authentication, but whether the very act of buying gold through these channels undermines the fundamental reasons many investors turn to precious metals in the first place. After all, gold has stood the test of time for thousands of years as a store of value. Shouldn't your approach to acquiring it demonstrate the same level of seriousness and long-term thinking? What do you think? Let us know in the comments below, hit subscribe, and let's keep the conversation going.